السلام عليكم ورحمة الله تعالى وبركاته. بسم الله والصلاة والسلام على رسول الله. اللهم علمنا ما ينفعنا وانفعنا بما علمتنا وزدنا علما. Hello everyone, this is Liquidity Club by Ahmed Shawi. Today is Sunday the 15th of September 2024. I'll be doing the weekly market review. Starting with TXY, here we have the weekly time frame chart. As you can see, now we're building liquidity, sell side liquidity here down below, as we've been forming relative equal lows here. A retracement here towards that inverted recovery gap and this SIBI recovery gap, a scissor imbalance, buy side inefficiency. Uh, I don't want to see price retrace or close, have any daily closure above the quadrant of this premium wick. So going to the daily time frame chart, the discount or the constant quadrant of the premium wick would be anywhere around here. So I don't want to see any closure above that. You can see that we revisited this recovery gap twice, here once and then twice. I don't want to see it being revisited one more time here as it's been used many times here. From here I just want to see it just hang down lower to the sell side liquidity. So as you can see, we have relative equal lows here. Now preferably and ideally I want to see price just wick above these highs to clear them out and then trade down lower, reach to this recovery gap, this CB, and then trade down lower, because we've built buy side liquidity here, as you can see, because we have relative equal highs here and we have relative equal lows here down there. So ideally I want to see price trade up higher first. The bodies preferably just stay here. We can have just this wick to trade up here towards this recovery gap, this CB, and then later on by the end of the week we'll be trading down lower towards this inside liquidity. So we'll be open, accumulation, manipulation here, and then distribution to the downside. That's how I'm looking at it, and that is going to be pretty much it for DXY. Going to ES here, I'm viewing the continuous contract and I'm viewing the weekly time frame chart. As you can see, we've seen a reaction trading of the fair value gap, as I've been calling out. I'm looking at this buy side liquidity as a target to be targeted in the future. Going to the daily time frame chart, you can see how we traded downward to this fair value gap and deeper towards this fair value gap here. It has been respected, and then after we reacted upon it, we retraced, traded to the constant quadrant of that fair value gap here, roughly to the 75% level, and then we reacted strongly to the upside. Thursday and Friday, we're approaching the buy side liquidity here. You can see the relative equalize here, and this high relative to this high is also a relative equal high. So we have two liquidity pools that I'm aiming and I'm targeting in the near future. So that's going to be pretty much it for ES. Going to NQ, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. As you can see, we reacted from the rejection block here, as you can see, and we got a weekly closure above this weekly fair value gap. Going to the daily time frame chart, just keep in mind this fair value gap here, the CB, and the buy side liquidity here. We also have this buy side liquidity here. So going to the daily time frame chart, you can see how price traded down lower to this volume imbalance here and reacted up from it. A retracement here to the high of that volume imbalance. This is pretty much telling me that we're likely going to be pushing up higher towards the buy side liquidity. Like, it's respecting the price delivery continuum order flow, it's respecting discount arrays and pretty much going through premium arrays as they are not even there. So as you can see, this is going to be considered as a bearish order block. Price just closing above the mean threshold of that bearish order block right there. As you can see, it has also closed above this weekly fair value gap right there. So next week we can get a retracement here towards this fair value gap, internal range liquidity, and then from here we might run up higher to the buy side liquidity, as I'm pointing out. You can see here with the equal highs here. After trading to the buy side liquidity and reaching towards this weekly fair value gap, price might start running down lower. But my main low hanging fruit target is this buy side liquidity, and just above it, if we'll be expecting an overreaction on or if price if it wants to be animated above this buy side liquidity. What are we targeting? What are we looking at? We're looking at this weekly fair value gap here, and it's three price levels that are significant to us, which are the low, the cost encroachment, and the high. So these are the levels that I'm looking at if price took out this buy side liquidity next week, and if it was animated to the upside. So that's going to be pretty much it for NQ. Going to Euro USD, also known as the fiber. Here I'm viewing the weekly time frame chart. As you can see, price has retraced deeper towards the daily bullish order block. I'll be showing it to you later on the daily time frame chart. But it retraced towards this favorite gap, which last week, the previous week, it posted a low that is just above that weekly favorite gap to build sell side liquidity. And this week we trade down lower, took out the sell side liquidity, reached to the internal range liquidity, which is the favorite gap, a busy buy side imbalance, sell side inefficiency, and then we react from here. I'm looking at the constant portion of this discount wick. This is pretty much in accordance with the DXY. In DXY, we're looking at the premium wick, but here for Euro USD, we're looking at the discount wick, and we want to see some support being shown from that discount wick. So, and we'll be targeting this buy side liquidity and this buy side liquidity right there. Going to the daily time frame chart, as you can see, we walked inside this fair value gap, but this wasn't enough for price. It wants to pretty much accumulate and engineer more liquidity. So what does it do? It traded up higher pretty much to trick everyone in the markets and even traders who are trading ICT concepts, ICT media arrays, that they can go long from here and aim at this buy side liquidity. What they don't pay attention towards is the actual BD arrays and whether the market needs more liquidity to be engineered or not. Now, this type of information or intel will be, you will reach that type of information or knowledge by pretty much getting more experience and reading the charts more. This is how you'll be getting it. But nevertheless, here after price has posted a high, it started trading down lower, trade down lower below the slow. Now, other traders will be expecting this as, look at this, we are likely going to be crashing down lower towards this price, this and liquidity. And this is possible, but I'm telling you, based on my experience in these markets and the probabilities of what I'm being provided with here in this chart or in this market, we traded down lower below this low just to take out the sell side liquidity that is residing below this low here and to reach towards this bullish order block. Now, this bullish order block can be classified as bullish propulsion block because we have already reacted from this bullish order block right there, as you can see. So reaction to that bullish order block, reaching towards this fair value gap and reacting. Now we're tracing down lower, taking sell side liquidity and reaching towards this bullish order block that's classified as a bullish propulsion block. And you can see the bodies are respecting the weekly fair value gap, and we have reacted to the upside and close above this fair value gap, which is also now considered as an inversion fair value gap. We have now on the daily time frame, we have this fair value gap that I want to price retrace and then just run up higher, attack the buy side liquidity. That's how I'm looking at it. And that's going to be pretty much it for Euro USD, or also known as the fiber. Going to Pound USD, also known as the cable. Here I'm viewing the weekly time frame chart. As you can see, the same thing is mentioned for Pound USD. I'm looking at the discount wick here. Now the discount wick here is longer than the one in Euro USD. So I'm also looking at the constant encroachment of that discount wick. I want to see some support here on the daily time frame chart. I don't want to see any daily closure. The bodies, I don't want to see any bodies residing below this low here after we've been closed here after this week. I'll be targeting this high here and the buy side liquidity right there. Going to the daily time frame chart, as you can see, we're creating lows on lows here, trying to reach lower. And now, personally, I wanted to see price retrace downward all the way towards this fair value gap here, because this is the only fair value gap that is printed in this sell side delivery. In this swing down lower, this is the only sales, this is the only CB, this is the only fair value gap inefficiency that is inefficient. So now it can retrace downward towards this fair value gap, and it can just rally up higher, trade to the buy side liquidity. Now, this is where you have to monitor the EURUSD, the fiber for closely correlated market information, and the DXY for inversely correlated information. So be targeting these highs here, let equal highs, and above these highs if it was animated to the upside, we'll be targeting the buy side liquidity here. So that is going to be pretty much it for this weekly review. I really hope you found this one insightful. If you have any questions or if you want to go over any information, please don't hesitate to join our Discord server. Link is in the description down below. Until I talk to you next time, be safe. Assalamu alaikum warahmatullahi ta'ala wa barakatuh.